Okay, up next, it's our business update. Time now for a check of the top business news stories. Our business editor is here. Hi there, Kate.
Hi, Tom.
Let's begin with the story of Google losing an antitrust case brought by the European Union. What's this about?
Well, it's one of a handful of legal battles that are still pending between the tech giant and Brussels. The EU's General Court in Luxembourg has dismissed Google's legal challenge against a €2.4 billion fine over its price comparison service. The firm is expected to appeal once again, but it marks the first time a European court has ruled against Google on an antitrust matter. Ellen Gainsford has the details.
It's strike one for Google. The internet giant has lost the first of 3 appeals it's making against separate antitrust fines, issued as part of a crackdown on big tech by the EU's competition commissioner. The firm could have to pay out €2.4 billion.
The judgment today delivers a clear message that Google's conduct was unlawful, and it provides the necessary legal clarity for the market. The Commission will continue to use all tools at its disposal to address the role of big digital platforms on which businesses and users depend.
The General Court of the European Union found that Google used its price comparison shopping service to gain an unfair advantage over smaller European rivals.
The Commission found that the results of product searches made using Google's general search engine were positioned and displayed in a more eye-catching manner when the results came from Google's own comparison shopping service than when they came from competing comparison shopping services.
The firm has amassed €8.25 billion in EU fines in the last decade, as the bloc makes efforts to regulate the digital economy. 2 further cases centre on the Android mobile operating system and Google's AdSense advertising service. But not all Google's legal battles have resulted in losses. Britain's highest court has blocked a €3.4 billion class action against the company, which had accused it of illegally tracking millions of iPhone users in the country's first data privacy case that doesn't focus on financial loss or distress.
A Facebook whistleblower has been urging the EU to crack down on social media and tech companies. Frances Haugen caused a stir in the United States when she accused her former employer of prioritizing profit over users' safety. Facebook, which has recently rebranded itself as Meta, has largely dismissed Haugen's testimony. She's been speaking to lawmakers in Brussels, London, and today Paris about what she hopes will be a game changer in digital regulation.
The right answer to this emergency is new rules and standards. Legislation in the EU right now has huge potential. It does not try to delete the problem with content regulations. It takes a content-neutral approach to address systematic risks and harms of the overall business model. I strongly support this approach.
Consumer prices in the United States are rising at their fastest pace in 3 decades. The Consumer Price Index rose at an annual rate of 6.2% in October. That's the 5th straight month of inflation over 5%. On a monthly basis, it was a 0.9% jump. The so-called Core Price Index, which excludes often volatile categories like food and energy, was up 4.6%. That's its largest annual increase since the early 1990s as well. Global supply chain shortages and strong consumer demand pushed prices higher. The data are likely to put more pressure on the Biden administration and the Federal Reserve to act to prevent inflation from making life too expensive for many workers. U.S. President Joe Biden described reversing that inflation trend as a top priority. The Fed's medium-term target is about 2%. Let's check in on the day's trading action now. Wall Street has dipped following those hot inflation figures. The Dow Jones over 200 points this hour. The Nasdaq 1.3% in the red. Bond yields or returns have jumped as investors looked to traditional safe haven stocks. The major European indices closed higher. The FTSE 100 outperforming there as shares of British retailer Marks & Spencer soared 16%. A little-known electric vehicle maker is now worth more than powerhouses Ford and General Motors. Shares of Rivian Automotive soared nearly 40% on their first day of trade today in New York. They had been priced at $78 per share. They're now trading just under $100 at current levels. The firm's market value has now topped $90 billion. It's set to be the biggest IPO of the year. Amazon owns a 20% stake in Rivian and Ford about 12%. Rivian makes electric pickup trucks and SUVs. It has plans to sell delivery vans as well, though like many startups, it has yet to turn a profit. It lost about $750 million in the last quarter. Well, one of the industries under pressure at the COP26 climate summit is food and agriculture. A new UN report says the sectors accounted for about a third of global greenhouse gas emissions in 2019. That's the equivalent of 16.5 billion tons of carbon dioxide. Over the past 3 decades, emissions from agriculture and food production are up 17%. Well, I've been speaking to Emmanuel Faber, the former CEO of Danone and a longtime climate activist, about the role the agri-food industry can play in fighting climate change.
Agriculture is a big part of emissions, as much as industry, basically 20 to 25% of the carbon emissions overall, 30-40% of greenhouse gas emissions. But unlike energy, agriculture has this magic ability that it can actually put carbon back into the soil through a change in the agricultural practices by using both agroecology, organic farming, regenerative farming, and technology.
And the rest of that interview will be airing in this week's People and Profit. That'll be on Thursday at 4:45 Paris time.
Thank you very much indeed. Our business editor, Kate Moody, thank you so much.